did want to get your thoughts for also our listeners. You do have a section where we talk about financing, business, and we did briefly talk about, maintaining debt. But you had an interesting little section about conventional debt versus, SBA, Small Business Administration loans. The SBA offers two loan programs, a 7A loan program and a 504 microloan program, and both of those programs can be used for to acquire assets and businesses if you so choose to do that. What are your thoughts, John, on SBA loans versus just getting a traditional bank loan? And I apologize, an SBA loan does get done through a banker, through an SBA lender. But what are your thoughts on going that route with an SBA lender versus just a non-SBA lender?
That's a good point. And the SBA 7A program is what is used for business acquisitions. Goes up to a $5 million loan, including fees and working capital. So for many buyers, that means the deal size up to between $6 and perhaps $7 million with a seller note and buyer equity. So what are the big differences? Well, before we get into that, these days the banks, if it fits in the SBA model, the banks are going to push the SBA program, and the bank makes the loan. The buyer pays a fee, which is really insurance, and the SBA guarantees at least 75% of the loan. More with some, caveats of different types of situations, but 75%. That's collateral to the bank.
Right.
So let's look at some key factors. The SBA loan is amortized over 10 years. Most conventional loans, 7 years. SBA is going to require a down payment of just a little over, what it works out to, a little over 10% of the price. Conventional loans are generally going to be 25, sometimes 20, but often 25%.
Right.
SBA is considered a cash flow lender. SBA loans, the bank considers cash flow as an asset, and they don't need full collateral. They will take business collateral. They will take home equity. But in a conventional loan, no matter what the bank says, it's rare where they're going to look at it and say,
they're going to need
not enough collateral.
Yep.
And then you get in, SBA, you are going to have a personal guarantee. Now, on a conventional loan, there are some differences on what banks will take, but they're generally going to want to have some kind of corporate or personal guarantee. You just,
you're selling me so far. You're selling me on an SBA loan. I mean, is there any huge drawbacks towards going?
They cost more. The interest rate's a little higher, and there's a lot of paperwork. But if the bank's not going to give you a conventional loan, or you don't have 25%, or you don't have banks should want deals where there's a heck of a lot of goodwill, because that means a heck of a lot of profit.
Yeah.
Instead of things that you can touch and feel and drive around.
Right. Makes sense. Makes sense.